In this week's crypto news, July's consumer price index has seen a smaller rise than expected, hinting at a smaller inflation rate and a possible sign that the economy is in recovery mode.
Coinbase shares drop as the company shows a $1 billion loss in the second quarter. What this could mean for the exchange.
Elon Musk predicted that we've seen the peak inflation rate even before the CPI numbers came out earlier this week. What those low numbers could mean for your crypto portfolio.
The consumer price index numbers are out, and inflation is actually a lot lower than what many expected, meaning that Bitcoin, Ethereum, and many other cryptocurrencies could be seeing a rise. Plus, Iran spent $10 million in cryptocurrency to purchase different assets and commodities. What that could mean for Bitcoin's prices. We have market prices to cover, daily winners and those losers to declare, and smart money moves to uncover to maximize your portfolio. All that and more on this episode of Crypto Market Today.
Today, we're offering you a very special gift: 100 free Unicoins. Unicoin is the first equity-backed, dividend-paying cryptocurrency, well-positioned to become the leader of the crypto market. In such case, your 100 Unicoins may become a $4,000 value. Unicoin was launched by Unicorn Hunters, the famous business show with stars like Steve Wozniak, the legendary co-founder of Apple, and Rosie Rios, the 43rd Treasurer of the United States of America. Simply go to unicoin.com/100 and enter the name of this YouTube channel as the code to claim your free Unicoins. Unicoin, the currency which pays you, is well positioned to win over currencies which shrink in value.
We're your hosts. I'm Lucy Vanghouse.
And I'm Brian Hoffman. Thank you so much for joining us today. But before we dive on in, don't forget to give this video a like, maybe a subscription, so you don't miss out on the latest crypto news. Let's start off with a look at the markets. Ethereum is the major headline going on into today on the eve of the Go Early testnet merge, the final test merge before the quote real thing, aka Ethereum's mainnet merge. The number 2 rated coin by market value jumped 8% to a new monthly high of $1,851. Ethereum educator and founder of the Daily Gui podcast, Anthony Sassino, tweeted out, "ETH Giga pumping on the day of the Go Early merge, probably nothing," end quote. As Ethereum moves one day and one major milestone closer to the mainnet merge, speculators are starting to, quote, buy into the hype. The Twitter user Salsa Tequila posted this trading view chart, which shows Ethereum September futures trading at 9.4%. That's a premium above the spot price, drawing to the conclusion that speculators are bullish coming into that merge, it would seem, end quote.
Why might speculators be bullish about the merge? For starters, the merge will reduce Ethereum's energy consumption by 99.95%. That's according to Ethereum.org website, essentially eliminating a major headwind narrative that cryptocurrencies are energy inefficient. And after the merge, the daily issuance of new Ether will drop by 90%, a massive reduction to Ethereum's supply. Ethereum currently has an inflation rate of about 4.13% per year. After the merge, the inflation rate drops to about 0.49% per year. The reduction in supply coupled with an increase in demand should spell higher highs for Ethereum's future price. How do we know demand for Ethereum is increasing? Glassnode Analytics revealed on Wednesday that the number of non-zero Ethereum addresses or crypto wallets that are holding some amount of Ether had reached a new all-time high, surpassing 84.86 million. And in anticipation of the upcoming merge, major crypto exchange Binance announced its support of Ethereum's merge to proof of stake. I think I'm getting a little Binance curious.
I think we all are with those prices. And it's kind of interesting too that Ethereum is going to be a lot more energy efficient. That really could pave the way for this merger to become really a catalyst for Ethereum taking over Bitcoin.
Right. Well, hopefully we'll be reporting on that on next week or upcoming here on Crypto Market Today.
Stay tuned for that one. And other news, Jim Cramer, the host of CNBC's show Mad Money and the Madman himself, joined the Ethereum headlines when he commented on his show, quote, It's a New Day by Ethereum. Have a quick watch.
But I would say that, look, Coinbase, look, it's a new day.
It is a new day.
It's a new
and
day.
By the way, it is a day in which we got a non-hot CPI number, and the S&P is up 1.5%.
Well,
that's helpful.
That's when you buy Ethereum, right?
Oh, I think that's what it says in the
says buy
Ethereum playbook. Yes, buy Ethereum. Buy anything. How about Dogecoin? Do you buy that?
No, but please, it's down 99% or something from when he was on Saturday Night Live.
And now all eyes in the crypto world shift to the Go Early test merge. If all goes planned and no bugs or technical issues are reported, then the mainnet merge is scheduled to take place on September 19th, only a few weeks away. Ethereum core dev Daniel C. tweeted out, quote, "Just a few weeks left until the merge. The whole core team is on their toes, working on the last fixes and stabilizations. We're almost there. Panda face, strong arm."
Bitcoin rallied 3.5% following the latest numbers from the U.S. Consumer Price Index, which turned out better than expected. The news helped Bitcoin's price reach a 7-day high, crossing the $24,000 mile marker. Bitcoin investor Lark Davis tweeted out this chart, which shows that the relative strength indicator, a key momentum indicator used by traders, is continuing its upward trend. Davis said in his tweet, quote, "Very nice bounce for Bitcoin RSI. Uptrend remains intact. Let's keep pumping." Taking a look at Bitcoin's weekly chart, the coin saw a 7-day low of around $22,485 before bouncing from that area and rallying to a high of $24,203.
Total market cap for crypto is up 0.7% over the last 24-hour cycle as it continues setting new 30-day highs. The current total crypto market value is now at the highest mark since mid-June. As of Wednesday, it stands at $1.12 trillion.
Taking a look now at the Bitcoin dominance chart. Ethereum gained about 1.5% on Bitcoin over the last 7 days. Bitcoin remains in the number one spot with 40.1% share of the crypto market, followed by Ethereum in second place, which currently holds 19.8% share of the market, followed by Tether in third with about 5.8%.
And on the list of crypto market cap's top 100 cryptocurrencies, Celsius, ranked 79th by total market value, is today's biggest winner. The CEL token price rose by 103% over the last 7 days and 31% in the last 24 hours. Following news, the crypto company Ripple, or XRP, is exploring a buyout of Celsius assets. The CEL token, as of Wednesday evening, was trading hands at $2.40.
Looks like I have the grim privilege of announcing this week's biggest loser. On the other side of the top 100, Eunice said Leo, ranked 20th by total market value, is the week's biggest loser. The token is down 6.7% over the last 7 days in a market that has mostly been green and down 3.6% over the last 24 hours. The Leo token, as of Wednesday, was trading hands at $4.71. Now for our day's biggest stories of the week. According to the Tasnim news agency, Iran made its first official import order using cryptocurrency earlier this week, a move that may allow the Islamic Republic a workaround the crippling U.S. sanctions. This $10 million order is just the first step towards allowing the country to trade through entirely digital assets. Shrugging off the USD-dominated system will give them a chance to trade for goods with countries who are also seeing sanctions from the US, like Russia. Quote, by the end of September, the use of cryptocurrencies and smart contracts will be widely used in foreign trade with target countries. An official from Ministry of Industry, Mine and Trade said on Twitter. According to Reuters, a study found that 4.5% of all Bitcoin mining is taking place in Iran as a result of the country's cheap electricity. Mining this cryptocurrency could earn Iran hundreds of millions of dollars, and that may aid in the purchase of imports and lessen the impact of sanctions.
Now, as we reported in the market update, the Consumer Price Index, or CPI, for July, well, that is out, and it's actually way lower than what many experts expected. The CPI rate is finally pulling back from a 40-year high. As the number shows, we are now at 8.5% for July. That's down from June's 9.1%. And this is due to things like retail discounting, a decrease in commodity prices, and a drop in gas prices as COVID supply chain issues do appear to be diminishing. The CPI was flat from the prior month, coming after June's 1.3% jump. The core CPI rose by 0.3% from July, a big step down from June's 0.7% increase. The annual core inflation rate held at 5.9%, and March's 6.5% core inflation rate was the highest since August of 1982. Experts expected the CPI to raise by 0.2% in July as the annual inflation rate eased to 8.7%. Now, Bitcoin jumped 2% and Ethereum jumped 7% in the minutes after the report, signaling a partial relief on the part of crypto traders and that the Federal Reserve might be able to relax its aggressive approach. Traders are now betting on a 65% chance that the Fed will hike interest rates by only 50 basis points in September. That's compared with 32% just one day ago, according to CME FedWatch tool. Recently, traders had been seeing a 75 basis point hike as the more likely scenario after the job report last week showed that the economy is still in very good shape. Several central bankers have signaled that they will continue to tighten until they see inflation come down significantly. Now, of course, the CPI numbers came out just like maybe a week after a very influential figure tweeted out that we may be seeing the end of a recession.
That's right, Brian, and this news comes after Tesla CEO Elon Musk says that the inflation has peaked, but still guesses that we will have a slight recession for at least 18 months. During Tesla's 2022 annual stockholders meeting, Musk replied to a question about inflation saying, quote, "We do get a fair bit of insight into where prices of things are going over time because when you're making millions of cars, you have to purchase commodities many months in advance of when they're needed. Because it's a long supply chain with a tremendous amount of inertia, so we sort of have some insight into where prices are headed over time." This mirrors several statements on Twitter he has made over the past month and went on to say that the recession is, quote, "actually a good thing for the U.S. economy." Further adding, it has been raining money on fools for too long. Some bankruptcies need to happen.
It's got some cojones on it. Well, cryptocurrency exchange Coinbase, in its second quarter earnings report, showed a 63% drop in revenue, equating to a loss of more than $1.1 billion. In an earnings call on Tuesday, Brian Armstrong, Coinbase's chief executive, stated that the company had survived previous downturns. Quote, "It seems scary, but it's never as bad as it seems," end quote. Coinbase's stock price has fallen about 75% since November, and it laid off 18% of its staff in June, or about 1,100 employees.
An unknown investor evidently spent or transferred over $3 billion, or nearly 133,000 Bitcoin. And that was on Wednesday, making the wallet one of the top 3 Bitcoin holders. Although this may be an old-time buyer simply consolidating or moving their Bitcoin into a different wallet in several transactions. According to Nexo data from June, Satoshi Nakamoto is the largest Bitcoin holder with over 1.1 million Bitcoin, followed by Grayscale with over 683,000 Bitcoin.
Now on to some politics. U.S. Senators Elizabeth Warren and Bernie Sanders are asking key bank regulators to rescind previous guidance on cryptocurrency. In an open letter, Warren and Sanders asked the Office of the Comptroller of the Currency to rescind previous letters that allowed banks to engage in crypto activities and provide further information on exactly how involved banks are in the crypto space currently. Lawmakers say they are concerned that several letters published in 2020 and 2021 by the former acting comptroller Brian Brooks, now CEO of the crypto company Bitfury, allowed banks to provide crypto custody services, issuing payments in stablecoins and various other crypto-related activities. The letter goes on to say, quote, "Given the risks posed by cryptocurrencies to banks and their customers, we request that you withdraw OCC interpretive letters and coordinate with the Federal Reserve and the Federal Deposit Insurance Corporation to develop a comprehensive approach that adequately protects consumers and safety and soundness of the banking system," end quote. The senators argue that the crypto space does not have a strong protection for retail investors, pointing to the collapse of Terra and Three Arrows Capital, as well as the bankruptcy of both Voyager and Celsius.
Now it's time for the Smart Money segment powered by Nansen.ai Research and Analytics. Nansen analyzes the on-chain data of crypto wallets that are active and prolific, such as whales, funds, or smart LPs. It calls these wallets smart money. The #1 smart money destination over the last 7 days is, drumroll please, thank you, Wrapped Ether, with an increase of $66.2 million, or 87% of this increase, representing about $57.7 million coming just within the last 24 hours. On the other side of the equation, Smart Money is exiting its position in USD coin. Approximately $58.8 million has been traded in the last 24 hours. Though on the 7-day chart, Smart Money still holds a 12.6 million position in USDC.
Well, sad but true, but we are reaching the end of today's episode. We're going to end it, though, with a little crypto arts and culture as we take a look at this week's highest selling NFT. And this week's winner is, drumroll please. That's right. It's another crypto punk. It is number 7622, and it sold for 260 Ethereum, worth approximately $429,000 at the time of sale.
That about does it for this week's episode of Crypto Market Today. But before we go, keep in mind that none of this is investment advice, and every investment you make carries its own risk or potential reward. We hope that this broadcast helped you make more informed decisions, and if it did, maybe give it a like or subscribe.
Yeah, and doing so not only keeps you alerted for any future content, giving you that little bell notification, but it also ensures that we can continue to bring you the latest in crypto news from around the world. Thanks for joining us for this episode of Crypto Market Today. I'll see you next time.